we've connected and collaborated on a Zoom
Yes.
together, or a live stream, excuse me.
Yeah.
And I think the market's done a lot, since we last spoke. It had a pretty good correction in the month of August, but then it roared back. And then at the beginning of September, it had a brutal week. The first week of September was brutal. It went down hard. And then it climbed this past week. So it's been a really interesting market. It looks like you're streaming to your audience, and I'm streaming to my audience. That's awesome.
This is perfect. I thought it could only do one. Now look at this.
So how you been? How you been overall?
Good. I'm doing some new things on the side, but I don't want to bore you with that. It was exciting to see Berkshire hit the $1 trillion club. They fell back, but they the first non-tech company to hit 1 trillion, which is pretty impressive. I mean, you might say they are a tech company, they own Apple, but they're a holding company, and they actually got rid of most of their Apple. And it's so hard to. That's why I love companies like Meta, and I love tech companies, because the scalability is like almost infinite, right?
Right.
It's hard to scale like most other businesses. I mean, you could scale anything, but like it's just so much easier for tech. That's why there's these tech companies that are 1 trillion, 2 trillion, and 3 trillion. I'm sure some are going to be 5, 6 trillion before you know it. But yeah, Berkshire is the first non-tech.
Yeah, impressive. And the other thing that I'll mention about Berkshire Hathaway is that they're holding $277 billion of cash.
It's scary. It's kind of like, why is it? I think he made a good move, because he said, which I think is correct.
You still with me, Scott? Let's say Scott might be having a connection problem, or maybe.
Can you hear me?
Yeah, I can hear you now.
That seems to happen. He saved us. Well, when he sold his Apple, let me get this. When he sold his Apple, he said, "I'm happy to pay 20% of taxes."
Mm-hmm.
And chances are taxes will go up, because we're in a lot of debt, and a way to solve that is raise taxes. That's one of the best ways, if not the best. So if he sold like say it was 400 billion in Apple, and let's just pretend it's all profit, which I know it's not all profit, but and he's like paying 20%, I think, because he's paying the highest. If you hold the stock for longer than a year, you pay long-term capital gains.
Mm-hmm.
So 400 billion. So he paid 80 billion in taxes.
Oof. Nice.
Which sounds like a lot, right? Let's just pretend it's his profit, taxes, tax rate, and taxes paid. But he said we're likely to see taxes go up.
Mm-hmm. So you kind of faded out on me again. You still there?
Again?
Yeah. Now you're back. Okay.
So annoying. So if it's raised to 30%,
that's like a $40 billion save.
He saved us $40 billion by selling now instead of selling maybe in a year or two. But that's, of course, anecdotal.
The other reason I think Berkshire decided, hey, let's get rid of half of the shares is diversification. It was a big part of the overall value of the company. So it was like pretty soon it was kind of like it was going to just follow Apple, the stock price would. So I think, they offloaded. It was a great gain, right? That was probably from a dollar perspective, his best trade of his life. That's a
Definitely.
long life. So,
For
yeah,
dollar
I mean,
terms, definitely.
Apple,
Yeah.
after he announced it at the beginning of Q3. So he sold it. He had to have sold it before June, right? So June. So since then, it's kind of gone a little bit sideways since then, but it did rally coming out of April. I mean, it rallied really well, 42%. It's done really well. And I actually think, Apple is priced too high. They're not growing their revenue. I think that's a big problem in tech. You don't grow, that means you're getting replaced. You're either getting replaced by another technology, or, consumers are enamored with something else. So I
Yeah.
think that there's a bigger long trend issue with Apple long term. So it's interesting that Berkshire Hathaway sold half their position,
It
and
kind
we'll
of
see
validates what you say. Yeah, exactly.
sort of, but the stock's been really hanging tough. It's sitting at $220 a share. In the
Yeah.
last month, it's okay.
Yeah. I remember when 2024 started, like a lot of my stocks, like Meta, I don't own Nvidia, but a lot of these stocks were just killing it. And Apple was down like 20% after 4 months in 2024. It started 2024 at 180, and then after 4 months, it was down to 165. While everything was like just doing amazing in 2024, then finally Apple, really, shot up to its all-time high. But it's just a great company. They've done a great job, and it's not gonna struggle. But I don't see the upside as much as it's like I'd rather have Microsoft than Apple. But
Yeah, I agree with you on that.
I think they're both great, and who knows? I mean, we could always only take our best guess at these things based on the information we have. But if you were long Apple, I wouldn't say like, oh, you're an idiot. I would say, you're probably a good investment. Yeah, you'll probably do fine.
It's just the piece that I would say is the biggest factor in my bearish outlook on Apple is their growth, right? In 23, they actually declined in revenue. And then right now, trailing 12 months, they're growing by 0.4%. I mean, that's no growth. Well, what's going on, right? Is Samsung selling more devices? Is what's going on with the consumer that they're not buying more Apple devices? Or the services, are they avoiding the Apple store? If you look at, you mentioned Microsoft is doing far better. Microsoft's a little less valuable from a market cap perspective, but Microsoft is massive and they're growing at 15%. I mean, that's really good growth, and they're already a $245 billion company. So they're growing their business by like upwards of $32-34 billion a year. They're almost creating a pretty good sized company every year, which is amazing.
Yeah. And the great thing about Microsoft is that they're really, baked into the AI. I mean, who isn't? But they really are. Apple, not so much, and that's why.
They're behind.
And I used to I remember when I was younger, I used to love Microsoft. I don't know why I didn't buy it earlier. I guess we always think of those things, right?
So one of the regrets that I have is I owned Microsoft for like 8 years, and I walked away a winner, but I walked away before it started to really hockey stick. And I'm like, oh man, that hurts.
Just don't sell. That's my new thing, because it seems like, well, of course you got to pick winners. If you're picking these garbage stocks, generally if you pick winners, don't sell, because in the long term they're going to do well.
Yeah. And I moved from good to good in that case there. So it wasn't like I sold Microsoft and then bought some really bad companies. So overall it was good. I invested in real estate. I did good with the capital. It kept growing, but it still hurts that I'd be sitting on a pretty sizable chunk and a pretty good percentage gainer. But I guess I was right for a period of time, and I took the capital, used it elsewhere, and that's that.
It doesn't matter how much money you have, and it doesn't matter how much money you make. You're always gonna regret certain things. But if you have $10,000, you're like, oh, I could have had 15 if I would have did this. If you have 100,000, you'd be like, damn it, I made these stupid. If you have $1 million or 10 million, no matter what, you're always gonna criticize your.
Well, more recently, I'm trying to course correct. So I bought Amazon at the right time, and I made a good gain, not in a long period of time. So Amazon.
Amazon finally, because I bought it in 2020, right after COVID.
You see this dip here, right?
Yeah.
That's not too long ago. And I bought, I bet big on it, and it rose really nicely. And I'm like, dude, this is great. And then it was well above, and I'm like, I'm going to go ahead and cash it out. I think it's going to drop. And I cashed it out, and it continued to go up. I didn't sell it here. I sold it more like here. It continued to go up, and it just haunted me. So when it had this pullback, I have been buying Amazon like a madman. When it had this pullback, I'm like, oh, I'm all over it. It's my number one buy action right now. And so I've built it up nowhere near where it needs to be. I wouldn't mind, investing $100,000 in Amazon, because it's one of the best companies in the world, and it's not going to be replaced. Nobody's going to replace their e-commerce business in the next 20 to 30 years. Their cloud business, their hyperscaler business, it's massive, and it's really profitable. You're not going to replace that for 20, 30 years. So those are the two huge businesses. And then the whole grocery business, I don't quite understand why they're in grocery, but why am I going to doubt the geniuses at Amazon?
Yeah, I mean, not everything's going to be a winner, and some things are just lost leaders. Like, I almost think the e-commerce business is just a way for them to break even, and they're just crushing it in cloud. Like they're making, I think half their profits are from cloud computing.
Oh, I would say like 80% of their profits,
and it's only 10% of their revenue. So it's kind of like they're doing the e-commerce just for a fun side thing, just to bring in, 1 billion customers onto their platform, and then they use the cloud to make money.
I think they break out their profit. Let me try to find it, and then you'll see that the hyperscaler business, the cloud business, it's the lion's share of their profit. Here we go.
Yeah, I usually talk about this. Let me open up their 10Q. Here's the 10Q.
So here's a segment. So AWS. For the quarter, let's go for the half year, right? For 6 months, it's a $51 billion run rate. So, for the year, it would be $102 billion. And their profit on it, operating income, is 18.7. So the profit over the course of a year would be 37 billion. So and if you look at the whole company consolidated, the whole company does about 48 billion. So a good part of that whole chunk of profit is the cloud business. And it's a big part of the sales, right? The e-commerce business is where the big revenue numbers at.
It's like 28% of their revenue, but like 70% of their operating income. So it's like in their international segment, you can see in 2023 they were losing money.
Yeah.
So they only made $4 billion of operating income in the first half of 2023 in North America, right? Are we looking at the same one? Are you looking at the second quarter?
I'm looking at the second quarter.
Yeah. Okay. Yeah. So I'm looking at my screen. So they almost broke even in e-commerce, like a $2 billion profit.
Mm-hmm.
Shit. Wait 1 second. So I just heard a big noise.
Sure. Yeah. So Amazon is just the piece to Amazon is their e-commerce business. Although it's not incredibly powerful, in my opinion, it's incredibly powerful. It's not maybe not that profitable, but you think about the commerce they're controlling and how much control and power they have over consumer packaged goods companies. Anybody who wants to sell to a consumer in the United States, the number one player is Amazon, because everybody's going to search and everybody's going to search for the product and do price comparisons on Amazon, right? So it's pretty
Yeah.
amazing. I still think Amazon's a still discounted, and I continue to buy. The market's been so erratic lately that it's presented opportunities to buy into stocks because it's just been so erratic.
Yeah, but it's I mean it's really gone unbelievable how much it's gone up in just the past 3-4 years. I mean
Yeah.
it's probably doubled in. Let me look at the S&P 500. It's 562.
Yeah, I still have Amazon discounted by 13%. It's a high quality company, so I'm still buying because 13% is fine as a discount because they're probably going to be more valuable over the next 5 years, maybe double in value over the next
Yeah.
5 years.
So it doubled. The market doubled in May 2020. It was 280,
Mm-hmm.
and now it's 560. So in 4 years, it doubled. So if you just put your money in S&P 500, you would have doubled your money, which is like in 4 years, which is like almost a 25% annual return, which is much better than these 6% money markets. People,
Yeah, I'm comparing Amazon to the S&P now. It looks like the S&P was right there with Amazon. You would have gotten there smoother, right? It would have been a smoother ride up, and
yeah,
you'd be close to their same return.
you just wait. You'd have to, and rates are going to go down to like 1-2%. So
Wow,
you
look
need
at
to
that.
put your money in for like 30 years just to match the past 4 years.
So
So
over
people,
5 years, the Amazon's gone up 102%. The S&P's gone up 87%. So it had been a smoother ride on the S&P, but Amazon still, you doubled your money in 5 years. So awesome. Keep going.
yeah, it should always be smoother with the S&P because it's 500 companies. But yeah, whether it gets there doesn't matter the direction as long as you get to the end. Like as long as you get to the person's home or the final result,
Yeah.
it's the same.
Yeah, I saw that, Amazon, they have you seen their drone delivery service? They have it like in one city in Texas. I think it's where's Texas A&M headquarters? College Station.
Austin? Oh yeah.
And these are drones that basically they can only handle a certain size package, but they're completely autonomous. They go and they drop it off in your backyard. It's like so futuristic. It does not make any money. It is not scalable. They're just kind of like doing some R&D and seeing how far they can get. I don't know if you've seen that little business they have.
But I mean, that's kind of like it's similar to the autonomous cars. That it's so expensive for Uber to split the cost of the ride with the driver. That's a big expense. So if they can get an autonomous car, in this case, they have an autonomous. Amazon has this drone that they don't have to pay a salary like the truck driver. They have to pay a salary. So it's they can really.
I opened up the Waymo website. Waymo's an alphabet company, right? Google, and you may have heard I think the news came out on Friday that they signed a deal with Uber. So Uber is going to use Waymo as an option to ride hailers in 2 cities. I think it was like St. Louis and somewhere else. Waymo's already operating in Phoenix, Los Angeles, West LA, and San Francisco. And it'll be interesting to see how popular these things are going to be and how this thing takes shape, but it's kind of hitting the street. It's already out there.
Yeah, I like the idea. in my lifetime, I don't think it's not like watching the movies. I remember watching the movies in the 80s and 90s. Life is not like it was expected to be. People like think,
Back to the Future.
Yeah, in 2020, 2030, it's going to be like the Jetsons. It'll never be that way, because even if something works well, I think there's some fear with a lot of people, discomfort, kind of like taking a plane with no pilot. Like the pilot doesn't really do that much on a plane besides the takeoff and the landing. If something goes wrong, it's good to have the pilot there, but they don't really need to be there. But not many people would feel comfortable going on a plane with no pilot.
I would not get on an airplane that did not have a certified pilot.
It's kind of like
a car is like a different game, because you got a seatbelt on. What's the worst that can happen? Like you get in an accident. Well, frankly, with somebody else driving, me to the airport, the same thing can happen. It's like, okay, and I think Waymo has proven that they have a better driving record than a human being, especially
it's so much safer. It's so much safer. But when there is an accident and someone dies, then they go crazy. Just like when there's a plane crash, people go nuts and they blame like technology. But almost all the time when there's a car crash, it's not even the car. It's just like somebody else on the road. But they still blame the autonomous car.
Yeah, so a conversation piece. Here's a conversation piece, and I'll kind of lead it off. So the AI hype, right? It's gotten really big, and people are like, I hear ideas out there like, oh yeah, we're gonna have nurses, robots that are nurses. Oh, we're gonna have drug discovery, and we're gonna have this and that and the other. And I think that's it may happen someday, but it's overly optimistic to say it's going to happen in the next 5 to 10 years, because certain industries and government entities will not want artificial intelligence for certain services or certain occupations. The Food and Drug Administration it's a very controlled, regulated industry. You have to get through the FDA if you ever get close to putting a robot in a hospital or to provide care for a human being. That's so future. That's like 10, 20 years from now, if it happens. Because I'd still like, imagine going into surgery and they're like, oh yeah, you're going to be operated by this robot. I'd be like, no way, man. I want a human being. What if something goes wrong? Like that kind of thing. In some use cases, it makes sense, like call centers, and you chat with an AI bot and you get the answers to the questions you have. Okay, I get that. That use case works. But I think the AI hype is just it's gotten ahead of itself. And it happened with the internet. It got ahead of itself. Stocks crashed. And then real businesses got created, and then stocks rose.
Yeah. But it's like, JB, well, thank you. I wish the state DMVs went automated. Those are some of the most miserable people alive.
Oh, I know.
A lot of government jobs, it's brutal. Yeah. And I think we're moving closer to automation, but there's always going to be kind of like if you ever that, like we were talking about doctors with doing a robot. There's that show 600-pound. That's what's it called? 600-pound person or something with Dr. Nazardin. And anytime he does surgery, he's not in the room. He uses a robot in another room to like go inside and like.
Well, he's in control of robotic stuff. Yeah,
he's controlling it. So I think we're moving closer to that, where it's kind of like you don't need a cashier at each lane, but you may need 10 robot cashiers and maybe 2 humans just to police it, to make sure it's still working. But yeah, I think, but you can see the evolution of like technology since 1900, we kept getting further and further away from humans. Now one person can do the job 100 people from 1900 with like QuickBooks or whatever program.
Yeah, I mean, it's like when the car came out, it was met with a lot of like anger, like, oh, what are you doing? That, the car makes a lot of noise. It emits all this pollution, which is right, and it scares the horses. And people, adopted it quite well, but there was a lot of pushback and it took a while. Now it's over 100 years later. It's obviously taken on, and no more horse and buggies are on the streets.
Yeah.
But somebody asked about Alphabet. It looks like Alphabet compared to Amazon, Alphabet did a little better. Alphabet's got a great business. I love Alphabet.
Yeah. I think they reach to most people of any company in the world, like in terms of the most users or customers, however you want to put it. They're like probably like 70% of the world uses Amazon in some respect. So that's a huge a huge benefit when you can attract that many people. That's why they sell more ad space than anybody else in the world, even more than Meta.
So are you using any, which AI like app are you using? Are you using Gemini, ChatGPT? Are you using Meta AI? Which one are you using on a weekly basis?
I don't use. I've used ChatGPT. I paid something for it at one point, but I haven't used that in a while. I don't really use those things. Do you use?
I've been using Gemini, and here's a reason for it is, so Gemini, when you go to Google search, right? And let's say we want to know what. So I was doing some searches earlier, so let's kind of go there. So it's beginning to put, and it didn't do it here, but when you do like, let's see, write a letter to an angry customer. So it was doing it. It's not doing it now, but it would introduce Gemini, and you wouldn't have to open it. Like right now, you can open Gemini, and then obviously in Gemini, which is the AI app, then you're like, okay, so.
Will you pay for this service, or is it free?
No, it's free.
Oh, wow. I should use it.
For a bad burrito. So let's say we have a restaurant, customer was really angry about a bad burrito. Boom. Copy, paste. We're good to go. That customer is going to be happy now because we took care of them. So that's the kind of stuff, like it does do really good searches. Like if you ask it, hey, what is the profit margin on Amazon's cloud business? That was a question we had earlier. And it does it quite well, right? So it puts up a nice write-up, and then it gives you access to a couple links. So it's taking search to a new level, and it's pretty cool. So that's Gemini. The one business, I don't know. I think you're a Meta stockholder, right? I'm Meta's my biggest stock, and
yeah, it's my second.
So Meta AI. Have you looked at Meta AI? It's pretty darn good, and I think Meta on its own, right? With all the advertising, and it looks like it's asking me if I want to install it. I won't do that now. But similar to the experience I just showed you, Meta AI provides the same experience, except it's been offered to me when I'm using my Meta apps, and my wife's been offered the Meta app, and she's been using it. So Meta has a big advantage of having almost 4 billion people using one of the Meta apps. So they're going to have a big advantage introducing their Meta AI app, which competes with ChatGPT, which competes with Google Gemini. So this has been interesting. Now, when I price Meta, I price it with all their current businesses, and I still buy shares on pullbacks, and it's the biggest position in my portfolio. But the AI business, we're getting it for free because it's nowhere in the numbers. So if this business takes off, it's like, sweet. That's even more value to the stockholder of Meta.
Yeah, and they were part of the AI game. They changed their name from Facebook to Meta because they were going all in. I mean, not directly with AI, but what they were doing was pretty much the same as AI. So they were part of this before NVIDIA was even popular.
Yeah. So we'll see how it plays out. Go ahead. I think I interrupted you.
I am paying for the service. It's called vidIQ, VIDIQ, and it's like it's linked to my YouTube, so it gives me like it makes thumbnails and it suggests like the keywords to use and titles of videos. I can't say I have more views than before, but it looks nicer. I think the thumbnails, and it's really the titles, even comments. Like when people make comment, it gives me suggestions on how to reply, like to make it more detailed. So I like that.
Yeah, we'll see how fast, like this is already out there, right? Meta AI is out there in the hands of users. The one thing I would, and I don't know if it's just me, but like ChatGPT, it was in so many conversations in 2023. It was like one of the most popular things. But I can't say that it comes up all that often anymore. It comes up, but it's just not so much like everywhere. And I'm thinking, is the interest fading? Kind of like when remember when Amazon came out with Alexa, and then Apple came out with theirs, which was what was it called? Siri. And the first year, it was really exciting. People were like, "Oh man, you could ask it funny questions, and it was kind of a fun little gadget." And then the interest really dropped off. Nobody used them. I still have Alexa product that I'd never use. So,
yeah. Yeah, I remember ChatGPT. It kind of like it gave everybody like a real world access to AI. Like people like finally understood what it was. It wasn't just this thing.
Right.
Like NVIDIA is not really giving everybody real world access to AI. They're helping a lot of companies, but like ChatGPT put it in front of our eyes, and it was so cool. And then AI boom took off. But there's going to be so many knockoffs similar to ChatGPT.
Yeah,
and it's hard to be the first because it's kind of like what's that?
America Online.
Yeah, I'm trying to right before Facebook, there was MySpace, and I remember MySpace came out. I was in my early 20s, and it was like it was the coolest thing because you had your own website. It was kind of like, and you could like customize it. It was have pictures, and you connect with people, and it was like it gave you so much more visibility, and it was like groundbreaking. But then you thought, oh, this is going to be the biggest company in the world. But then, Facebook comes out, and then it just, MySpace is like.
Well, what happened is MySpace allowed pedophiles to operate on MySpace. And once that was discovered, the company got in a lot of trouble, and they got a kind of a bad name. And that opened the door for Facebook, who learned from that and said, okay, we got to like totally guard against pedophiles because we don't want that to happen to us. So it was kind of like, the first mover kind of gets bloody when they realize, oh, we didn't have enough security or safeguards for that aspect of social apps, and they paid a big price. And then Facebook came in and they were like, okay, we got to safeguard against that. And they did so. All right. So
Yeah.
Let me check comments. I don't know if there's any topic on the comments that you want to
Chris
latch
mentioned
onto.
fuel cell. That stock is like down like 99%. It's really struggled.
You want control of the screen?
I did a video on. No, I'm.
Oof, man, look at that chart. Oh my God. So it's from its high, it's down 98.16%.
Yeah. So it's I can't remember exactly what they do. Fuel cell.
Well, fuel cell is that where they burn hydrogen versus another fuel, and the emission is vapor, water vapor. Is that what it is?
Yeah, they operate and service fuel cell power plants. It has 50 locations all over the world. Operates the world's largest fuel cell park in South Korea. I guess it's just another alternative energy that didn't take off. But yeah, I remember there was a lot of hype on that company, but it's kind of
I think the EV market, right? Like fuel cell, right? The burning of hydrogen. The hard part about it is the distribution of that. I think they have to have it under a colder temperature to keep it liquefied, and then it wasn't like gas stations were ready for it, so they had to build new gas stations that had the special equipment. So it was coming out, I'm going to guesstimate like 20 years ago, and before I can gain adoption, EVs came out. And EVs were easy because, hey, everybody has power receptacles in their home. So the concept of recharging your EV at home is very real, as well as, accelerated charging stations. So that's what I think interrupted the whole fuel cell market. They were disrupted by EVs in a big way, from my point of view.
Yeah. I guess a good way to think about it, a fuel cell produces electricity. It's just a different way to produce electricity, a cleaner way. But
yep. So all right. So I'd love to get your opinion on something really quick. So do you, looking at the market with regards to what a seasonal, I would say a seasonal downturn in September and October that stocks tend to see, what's your opinion on that? Are you expecting it? You have no idea, ignore it? What's your view on that?
Sorry, I was reading that comment. Shadow guy is also Scott. Can you repeat that?
Yeah. So it seems like every year in September, if you look at September, October, stocks go down, and they certainly started September that way. If you see my screen, I mean, it went down pretty fast, 5.7 on the NASDAQ, but then it's really bounced back quite nicely, right? So I'm expecting more turbulence in that area because of the elections coming. That adds another extra layer of uncertainty and maybe some emotions and some fear. So I've got some cash, and I'm keeping that cash ready so that if we have a good correction, I can buy more Meta, Google, Amazon, and so forth. Any thoughts in that area?
Yeah, I try to ignore like those anecdotal things like September is a bad time to buy, stock market goes down, or I just try to if stick with good companies. Although the market, I do agree, it's getting a little inflated. But if I listen to people, like I remember in 2010, they were like, "Oh, it's too inflated. I'm waiting," and people just wait and wait and wait, and they missed so much upside. So I don't know when the dip's going to be. There will be a dip of 20% dip, 30% dip, maybe even 40% dip. I don't know, within the next year or two. It always happens, and then it rebounds and comes back. But I still think, but when I look at like the market today versus like other time periods when people said it's too inflated, I just think we're not just in the US, but in most countries, we have such a strong economy that companies are generating a lot of profit, like lots of money, like unbelievable amounts. And I think there's the number one reason is inflation. It's really driving prices so much higher, and then profitable companies become so much more profitable with high inflation, and companies losing money become even bigger losers with inflation. So it's kind of like it's just leveraging things. So I'm real bullish. I see like a lot of upside. I'm not sure the stocks though. That's the hard part. Which ones? I think the safe bet is just to bet in the S&P 500 because it's like we were saying earlier, the market's up 100% in 4 years. I know too many people who keep saying I'm holding cash. I'm holding cash. Well, if you would to double your money, you would have had to wait 40 years or 30 years just holding cash. So it's just like you just lose too much. But yeah.
Yeah, most definitely. I think it's really hard to get out and get back in with a major part of your assets, right? Like,
yeah,
I mean, not everybody's 100% stocks at any one time, right? Like speaking for myself, real estate's my number one asset class, and then stocks, and then I have bonds. And bonds take care of, like, I take my living expenses and take them off the table for the next 5 years, and I put that in bonds. It has a yield. It's not as good as stocks traditionally, but it really stands up tall when stocks go down. That bond portfolio looks pretty good. So in the portion of stocks, I'm always, I would say 80 to 95% invested in stocks. Like of the money that's in there, it's very little is cash. Right now, I'm probably at 10%. And it feels a little uncomfortable that I don't have enough cash. I kind of wish I had another 5%. But it's hard to sell a stock because I don't want, the same thing that happened with Amazon or Microsoft. Oh no, I sold that stock, you dummy. Now it's, flourishing. So I'm carefully like my bonds are maturing and I'm taking that cash into my stock portfolio and building up the cash that way. I'm getting, some of my income outside of my portfolio. I'm putting that ready for cash because it does feel a little bit like it's been a little too much, too favorable going to the upside. We need a solid, really nice correction. We haven't had a good one for a while. We had a pretty good one in 23, and 23 was still a good year, but we still need a solid pullback, almost like taking medicine. So Trader Prad, thanks for joining. Do you know Trader Prad, Scott?
No.
So I met him through Stonks, which is a streaming platform that I think was around for like 2 months, and they've ceased to exist. But what was good about it is I met some really cool streamers, Trader Prad being one of them. He's more of a trader, and I'm more of a long-term investor. I think you're in that category, but he's a brilliant guy when it comes to trading, and hopefully I get to collaborate with him and introduce him to the people who watch my channel and vice versa. So welcome, Trader Prad. And everybody check out Trader Prad. I don't know, Trader Prad, if you can put your
I'm gonna sub
your YouTube or whatever to have people find you.
Yeah, I'm gonna put his link. I just subbed to Trader Prad. But
there we go. All right, so that's where we are market wise. Any stocks that you want to take a look at?
Well, my biggest gainer percent wise is the Brazilian fintech Nubank. I don't know how much more upside that has. Although
it's NU, right?
yeah, NU. I think I'm up 250%.
Nice.
And I just bought it on a because I have a Roth IRA I opened up a long time ago, and I don't have that much in it. And I put it all into I can't remember what I put it all into. It was a risky investment, like a company that was going bankrupt that I thought had some upside potential. So I thought they would like double, triple, and ended up losing like 40%. So I was or 50%. So then I wanted to invest in something that I thought had a lot of upside potential. Anything that has potential to 5-10x has also has potential to go down 90%. If you want safety, you're probably not gonna find something. But yeah, so it worked out in this case. I got it at like 4.25.
Nice.
Almost at the low. It was like I think down to like 375 at the low.
Deal. Congratulations.
But I've done a bunch of videos on it. It's not a small company either. I mean, it's 70 billion market cap. But they have a good market because fintechs, because in the US, I mean, fintechs, I think, have appeal everywhere. But in the US, people generally use a bank for the most part. There is a good chunk of people that can't afford to have a bank account. They don't have much of savings, but most Americans have a bank. In South America, it's a little different. In Central America, it's a little different. Most people don't have banks and don't have enough capital, and banks aren't really that trusted either. So this company is really appealing because
so the growth is incredible, man. 100% growth, and they're sticking to it.
Yeah.
You know, I get asked on my streams, one of the most popular stocks is SoFi. And I've never been a SoFi stockholder because I always look at their fundamentals and go, I did really well with Robinhood. I did really well with StoneCo, which is another Brazilian company. I sold StoneCo and consolidated into PayPal. Hopefully that begins to work. But if you compare SoFi with New, there is no comparison over the last year. I mean, you got New Holdings up 95%, SoFi down 14.48%. And SoFi to this point is no longer a new player. It's like, guys, you got to prove your business. So for some reason, a lot of investors that tune in are like, what about SoFi? You know, and they look at the growth and maybe get interested in the growth. Any comments on, have you looked at SoFi recently?
I know they've come up. It's funny because SoFi and Nubank from 2022 to pretty much the end of 2023. So for those 3 full years, 2022, 23, 2 years. For those 2 years, they pretty much tracked each other identically.
Right.
And then since the end of 2023, Nubank is up like, a couple 100%, and SoFi is down like 50%. That's generally what happens, when there's like, it's kind of like the cannabis. When Biden got elected, cannabis stocks went up a lot because they're like, it's going to get legalized in the U.S. And stocks will move up and down a lot for whatever news event is going on. But the good companies stay up and keep going up. The bad companies eventually come down. So I guess it's our job to try to figure out which companies are inflated.
Yeah. And when I look at SoFi, the piece that's missing to me is like they're growing, right? But their profitability isn't there. And let me look at New Holdings really quick. So here's New Holdings. They hit profit. Okay. That's a big deal. You can't be unprofitable forever, right? You have to turn the corner and become profitable. And the SoFi story is like, guys, you've been losing money. The best thing you could say is, hey, we're losing less money. Well, that's fine, but you've been around for a while. So I'm not a believer until you really show me that you can make money. And that's been my hang up with SoFi. I've never owned the stock, and I got SoFi Stadium in my backyard. I go watch football games there, but that's as close as I get to SoFi. It's going to the stadium to watch football. Yeah, interesting. It's interesting that it's come up so many times. I kind of like shake my head and go, there's so many. I always say this is we have thousands of stocks to pick from, and I'm not exaggerating. There are thousands of stocks. You don't have to buy a stock just because it's maybe something that's being talked about a lot. Compare it to its peers like SoFi, compare it to compare it to a variety of companies that are similar to it, and then pick the best one that has the best fundamentals, maybe the best story, and then track it quarter to quarter and see if they're really improving their business. In the case of SoFi, I don't think they are. And New Holdings is. They're profitable. They're growing at 100%. That's phenomenal. So nice work on picking New Holdings.
Yeah, I hope I didn't sell it. It's kind of like what you said earlier. It's hard to sell. When you have a winner, when you're doing well, you think it's going to always continue. So it's hard to sell. And the thing is, if I sell, I need something to buy. So usually the time I sell, generally, I mean, sometimes I do sell because I don't like the company anymore. Generally, the time I sell is because I need money for something, and it's usually to buy another stock. Sometimes it was to pay off my mortgage or something like that. But generally, when I buy, it's because I have extra money, and when I sell, I need money. I try not to sell because I'm scared, or the economy, or something. I try not to ignore the noise, which is hard to do.
I got out of StoneCo, and I'm glad I got out of it because it's gone down quite a bit compared to New Holdings. New Holdings was a place to be, and so glad I sold StoneCo. Okay.
Somebody mentioned Paramount. I just did a video today. I released a video on Paramount Global.
What was your conclusion? Was it a good stock to consider? Was it a buy? What was your conclusion?
I think, I wouldn't buy it, but a lot of stocks get beat up so much that they do seem like a buy, but they still go down. I'm not saying that's the case, but like a lot of stocks getting beat up so much, for whatever reason. I'm just too.
The one hang up I have with Paramount is their debt level. I think their debt's a little too high. So if we look at their debt level, it's long-term debt's $14.4 billion. And then anything in the current debt? No. So if you look at that and you look at their EBITDA, they just have a high debt level, and it's going to take a little while for them to lower that.
Yeah. I have. I could show you guys all the companies and all the entertainment industry companies.
Mm-hmm.
Let me. This is why I do all my videos.
Yeah. I like how you put like a company and compare it to its industry peers. It's awesome.
Wait, can you see my screen? No, I don't think so.
All right, I just put it out there, and you might want to increase the. There we go.
Yeah. Let me just. Okay. So this is why. So these are the top 20 companies in the entertainment industry.
Can you increase the resolution? For some reason, I can't really see it very well. Maybe increase it to 150% or something.
Oh, I don't know why it didn't.
There we go. That's nice.
This is the full chart. So 42 companies in the entertainment industry. Netflix is the leader. So I'm pretty bullish Netflix. I always regretted not buying it because I wanted to buy it in like 2012. I was planning on buying it, and I did pick it up a couple, 2-3 years ago. So I'm up about 80% on that, which is nice. I do actually own Disney. When it was 85, I picked it up. But I think Netflix is just a giant, and I think that they have too much control over the streaming industry, and I can't see anybody catching up to them. So I think they're going to continue growing. It's just too expensive of an industry to compete in. So they're the biggest, but Disney generates the most free cash flow out of any company. And look how much revenue Disney had in the trailing 12 months, 90 billion, which is almost triple Netflix.
Yeah. And they're number one in free cash flow. That looks good.
But but you could see how much stronger Netflix's margins are. With 36 billion of revenue, they converted that 7 billion of free cash flow. Because it's easy to scale. Theme parks are not as scalable. Although Disney does have streaming, but theme parks, they keep up a lot of they have a lot of CapEx spend, as you can see, 5 billion.
Yeah. Yep.
Yeah. So it's on the wrong one. Shit. I'll just leave it.
There's Paramount.
I meant to highlight Paramount, but I highlighted EDR by accident. So yeah, here's Paramount. That's what we were just talking about, right? Yeah.
Yep. So
debt to equity ratio is not bad. It's a 1. So that means their debt is equal to their equity. So they're not as leveraged.
So I compared debt to EBITDA. Like EBITDA, if you had to pay off your debt, how quickly can you pay it off? So that you use a different ratio there.
Better way to do it. This website I use has debt to equity, but yeah, debt to EBITDA may be better because it does give you kind of
the one company in this area that it's hard to include them because it's a conglomerate is Alphabet, right? YouTube is the number one streaming platform on the planet now. It's number one ahead of Netflix, and YouTube has the advantage of they're really not paying me or you to create content, nor are they paying all the other content providers. It's a very kind of crowd sharing kind of platform. Netflix, on the other hand, when they create these new shows, which are fantastic, they have to spend so much money in production to create that content. YouTube is like, hey, we just let the world loose on our platform and they create content for us.
It's a lot cheaper when you have everybody doing the work for you. They do provide different things. Like I probably spend more time on YouTube, but Netflix, I think I'm always going to have because I like a lot of movies I want to see, a lot of TV shows I want to see, and
it's a necessity.
They have a lot of content.
Were you a Netflix customer when they actually mailed you the DVDs?
Yeah.
I was too. So I was a customer then.
That's why I wanted to buy it back then, and I didn't.
I was a first generation streaming customer, but it was kind of choppy. If you remember, like the first year, it was like it would spend a lot of time, rendering and kind of getting the content ready, and they'd be like, oh, this isn't as fun as just putting the DVD in and going. But they kept at it, and they were so smart for doing so, and now they are where they are.
Yeah, back in the 90s, the mid 90s, Netflix offered to be purchased by Blockbuster. They said, we will
for like $1 million or something, or $10 million
to you, and you continue operating the brick and mortar stores, and we'll operate our streaming service, but you can acquire us. And Blockbuster laughed in their face. There was a really good documentary because Blockbuster was just massive. Because I remember my parents owned video stores when I was younger. And if you want to know a little history of Blockbuster, so the way they scaled so quickly and became the number one video store company is they would just go. There was so many mom and pop video store companies because my father saw the demand when we went to video stores in the 80s. So he opened one in Staten Island where we live, and it was such a success. So what Blockbuster did is they would go to these mom and pop video stores like my father's store, and they would say, we want you to turn your store into a Blockbuster franchise. So it would be named Blockbuster. We would give you, marketing, things like that. And you would pay us a royalty. If you don't, we're going to push you out of business. I'm sure they didn't say
create a
exactly,
Blockbuster across the street.
because we're taking over. So either you convert to Blockbuster or everybody's going to, that's what drove my father out of business, really, is that why would you go to my father's store and pay more money and not have, like, if you wanted to see like the movie Big, there was 2 copies at my father's store. There was 20 at Blockbuster. So it was like it drove all these mom and pops out of business if they didn't convert. And that's how they scale so quickly. But they made a bad decision because they didn't want to do streaming. They didn't see the future in it. And then they went bankrupt because Netflix took over.
And that's how the West was lost. Now Blockbuster doesn't exist. There's one Blockbuster, I believe, it's still in existence in Oregon.
Oregon, yeah. There was a Netflix documentary about it, right? That was really good. It is still there. I know it was like 2-3 years ago. I haven't really. It's pretty cool that they, because it's an expired patent. Like they don't have to pay a royalty, so they can still use their name legally.
We'll see how things play out there. But again, like the Alphabet as a stock in a company, right? It's one of the stocks that I think is undervalued because it's unappreciated how powerful their businesses are. YouTube being super powerful. Their cloud business is growing faster than the other hyperscalers, but it is smaller. It's smaller than Microsoft's. And but if you look at all the value of Alphabet, I mean, I'm buying more Alphabet. I'm okay. I think my biggest investment in dollars is in Alphabet. Now it's not as valuable as Meta because Meta just got on this freaking rise in 2023 that was awesome. And it's still been doing well in 24. So Meta's worth more, but I've invested more in Alphabet.
Yeah. I bought Alphabet in February 2022 at 146, and I was down for like a year and a half. Finally, I should, probably bet on to buy it, but, it was before the split, before their big split, this 20-for-1. I bought it in February. So the split was in July, it looks. Yeah, I bought it back here at 146. And you could see at one point I was down like 40%. I had to wait a year to finally break even. But yeah, I think long term, it's such a big company. There's
if the AI business, if the AI industry, I guess, becomes something big, Google's going to have a front row seat. They're going to be involved, most definitely. So, if AI does become something, I've got AI plays in Google, in Meta, as well as others. But again, I'm not saying that AI is going to replace everything tomorrow. It's going to take a long time.
There's a Radio Shack.
Radio Shack.
Radio Shack lives on today through Unicomer, who purchased it. So there's 46 Radio Shacks. Oh, it's not one like Blockbuster, because it's in Washington apparently, according to JB Weld. I remember Radio Shack. That was a good store. And it's interesting because you can have you can be at the right time and have but execution is just poor. It's kind of.
Yeah, I think Radio Shack got killed by Amazon because what was cool about Radio Shack is if you were really looking for electronics and subcomponents and stuff, that's where you went. But even they couldn't carry all the inventory. But if you go on Amazon, boom, you have access to the inventory of everybody. You're basically shopping for whatever you want.
Yeah,
Like I built the computer that I'm currently on, and actually my son, 20-year-old son, built it for me. Everything was procured through Amazon, and it's less expensive. You have access to everything you need. That's an example of what drove Radio Shack out of business. Is once people were like, I can shop at the convenience of my desktop. Most Radio Shack customers had a computer. Most of them were connected to the internet, and it really drove this business out of business.
Yeah, I guess it says in 2015 was when it kind of like filed Chapter 11. I thought it was before that. I didn't realize it was that recent. Because I remember in the 80s and 90s going to Radio Shack.
Retail is so hard.
I hate retail.
There's few retailers that just thrive. Retail is just so hard. You're competing against Amazon. You got theft issues. You got expensive real estate you have to lease. You have to hire employees. It's an industry that I try to stay out of. I'm like, yeah, I think you mentioned it earlier, of some of these companies, it's incredible, their margins and how they just generate a lot of cash.
Yeah.
Retail, you don't see that. It's hard for them to grow. They're not very profitable. A lot of bad news comes and finds them. So I try to stay away from retail.
Yeah, I do own Costco. I think that's the only retail I own, and which is doing great. But it's such a brutal industry. Supermarkets are terrible. The margins are like 1%, maybe 2%. Whole Foods might have 3%, but for regular supermarkets, like you can't make a mistake. Or
I own Kroger, and I've done well. Kroger is up so Kroger is the one exception on retail, right? Because it's food. And
the thing
like
with
over the 1 year, it's up 22%. They pay like a 2.5% dividend, so 24% return. I'll take it. It's that's the only retailer and the only food company I own. I own like $60,000 of it. I think it's a very well run company like Costco. Costco's exceptionally run, and they do have like Costco's on a league of their own. They kind of do their own thing, then everybody else does what they want to do. And Kroger's been a good stock to hold. I'm not winning any like appreciation contests out there, but it's been a good stock for me.
Well, yeah, if you want safety, a supermarket stock is pretty safe because whether it's a terrible time like COVID and people are out of jobs, or it's a great time, people go to supermarkets.
Correct.
You can't resist supermarket. There's just too much demand, and that's why they offer dividends, because it's a kind of guaranteed cash flow.
Here's what's funny is Kroger has outperformed Amazon over the last 5 years by 11%. I wouldn't have guessed that, but they did. It's been a good stock for 5 years. So I've been a long-term holder.
And if you have to, most people don't think about the dividends. They just say, oh, the stock is up 20%. Or some people go, this stock sucks. I owned it 20 years and I'm flat. I go, you're not flat. You're doubled your money because you've been getting a 4% dividend. People go, oh, no, that doesn't matter. Like the dividend, like it's Amazon. Yeah. If I go back 5 years, Amazon and Kroger are both up the same 100%, but Kroger's up a lot more. Why did it change? If you include
the dividend.
Yeah.
And if you saw the chart, the Kroger chart's far smoother. It's up and to the right, and Amazon's been, up, down, up, kind of like for a while, like 22 to 23, it was down substantially. In that time, Kroger was flying off the charts because when everything else was not working in 22, Kroger went way up. That was the time to be in staples, right? So It looked really good. It was outperforming all tech stocks for like 1 year, and then it came back down to earth.
JB Weld must be from, I'm going to guess, upstate New York, because he mentioned Wegmans. There are Wegmans outside of upstate, but there's a lot of Wegmans upstate. But that's the best supermarket, Wegmans. Yeah. I worked at Wegmans in college. And have you ever been to one?
I've never been to a Wegmans. No, never even heard of it.
It's mainly in the Northeast, but I think they have some in other places.
Mm-hmm.
But it's just they take it to another level. It's just it's hard to explain, but it's kind of like they have like a cheese department with 100 cheese. They have like a lot of it's good quality and a lot of things, and that's definitely the best supermarket chain, I think. There was another supermarket.
So Sprouts, take a look at Sprouts. Sprouts has been killing it. Look at Sprouts. It's a grocery store. It's more of a premium, but they're Sprouts, up 400% in the last 5 years.
Sprouts is really, really premium. This one got closed down that used to be by me, but I think there's another one. There was a supermarket chain. I can't remember the name of it. And I thought in Massachusetts, like that. Yeah, Sprouts.
Yeah, look at the 5 year, and it's like, wow.
They don't pay a dividend.
They're a higher growth company, so that's what's really causing them to really gain a lot of appreciation. But I'm like, this is the grocery business. It's not like, hey, they're Meta and they have like 85% margins. No, they have like, instead of 2 to 3% margins like Kroger, they have 4 to 5. And it's like, well, you're still way down there. I mean, it's not like you're going to change that category and all of a sudden have 50% margins. So I'm not believing that it's going to be sustainable, but I've been wrong so far. I'm like, whoa.
Brockport. Okay. Yeah, I went to SUNY Buffalo. There's a SUNY Brockport too, right? Look at Sprouts was 20 5 years ago. Now it's 100. So it went up 400%.
Yeah,
that's pretty amazing.
It is.
That would have been amazing because it was from an IPO. Right after IPO, it got to almost 50.
Mm-hmm.
And if you got it then, which I'm sure a lot of people did in 2013. You would have had to wait 11 years to get back to 50.
Right.
So that would have been an amazing time if you could have picked it up in 2020, 2021, 2022. I mean, it just blew up. Wow.
I'm going to look at their fundamentals, and every time I look at it, I'm like, why are people so excited about it? It's a grocery company.
The thing when you change margin from 3 to 4% or 4 to 5%, they generate so much revenue.
See, they're growing at like 9% in the trailing 12 months, 6% in 2023. I mean, the growth is not like, oh, wow, that's amazing. And they're doing it by opening new stores, which is it's not organic growth. It's not 100% organic growth. You know what I mean? Like if you have the same number of stores and you grow organically, that's impressive. If you're opening new stores, of course you're growing because you just opened a new store.
Right. But that's the only way for them to really grow, because you can't. You can only get so much revenue out of the same store. You can't grow that much same store sales as much as opening new stores. But I mean, it is about 3%. I think it's about 3%, 2 to 3% margin. When I look at the net income, though.
Mm-hmm.
Free cash flow is probably, I guess, similar. But this one, it seems so attractive when a stock goes up a lot. That's when people buy. Is like they don't buy Nvidia before when nobody's talking about it. They buy it when everybody's talking about it because they don't know about it, and then they lose money. But people are going to probably buy a stock like this because it went up so much.
I'm buying it because it's going to go up because it's been going up.
Yeah,
That's the theory. Until it goes down, then everybody's like, oh man, well, I don't want to buy Meta at $85 a share, man. That's a losing stock.
exactly. But yeah, I never really looked at this one. That's interesting.
Yeah, this one's come up a few times on my streams, and I've been impressed and surprised by the appreciation in the stock. I think part of it is it's a small cap, right? It even after a 400% plus rise, it's still a $10 billion market cap. So it's like it could double again, and I don't know if it's a lot of investors are going to notice it. So it's been a real good winner in this small cap space.
Yeah, 400 stores. That's not definitely not a small company. 400 stores, 35,000 workers. It's in almost half the country. Yeah, it's expensive though. It's definitely. I don't go there. I go to Costco. I think the quality of Costco is comparable to stores like this. This store may have, I guess, better quality possibly, but Costco is really good quality and the prices are amazing.
Yeah, you just can't get everything at Costco, but it's almost like for us, my wife and I, is everything you can get at Costco, you get it at Costco's because you're getting such a good value and quality. And then everything else you can't get, we would get it at what is Ralph's for us, which is a Kroger brand. And then Trader Joe's. We really like Trader Joe's. So those are our three top vendors for food and everything we consume at home.
Yeah, I pretty much only Costco.
Like shaving razors. Once you've bought shaving razors at Costco, you cannot buy them anywhere else because you get like a pack that's going to last you. I don't know.
Yeah, that's true. I have a huge bag of
but each one, like your per unit cost drops so much. You can never buy them again like normal retail because you're like, I'm paying double. There's no way I'm going to pay double.
Exactly. I remember when I had my business, if Costco sold it, I wouldn't compare prices. Like if I found something, at any other store, I would like go, let me look online to see if it's cheaper. If it's sold at Costco, I just bought it. I never looked around anywhere else because it's pretty much always cheaper at Costco.
And then Thanksgiving dinner, Christmas dinner, it's like Costco. It's like we get most of the meal at Costco if we're going to host, right? If we're going to host 25 people, it's like, okay, Costco for everything we can get, and then everything that we cannot get, we'll get it elsewhere. But that's definitely for big events, we go to Costco.
Yeah. Okay, so should we wrap up here or?
Yeah. I think it was a good stream. I think it was good to connect again. Hopefully we can stream again together. And you tell me how you'd like to stream again. It'd be nice to connect and get two minds on the stock market. We'll see how things behave in the stock market. But again, the first week was like straight down in September, and then the second week straight up. It's like, holy smokes, man! Can't we have any kind of smoothness to the market? But
it'll make trade options. You could make a lot of money.
I know. So that's where Trader Prad's probably like, hopefully killing it. If you have that type of volatility, I think traders really love volatility because if they can take advantage of it, they can make money. I have been selling options. I've added options, to my investing. And I've added shorts, as mentioned, I shorted NVIDIA. I think I'm down a little bit, but boy, that's been an interesting experience.
I know you were doing well probably at one point.
Well, for a while I was like up 15% on NVIDIA, and right now I am down 4%. But it's been kind of like down. Oh, I'm down 12%. Oh, now I'm up 15%. Oh, now I'm down 4%. It's an up and down, which reinforces my story, which is NVIDIA's hit the ceiling because it can't punch through. And if we get stories around, hey, these hyperscalers are going to start, uh, trimming back, kind of pumping the brakes on buying new GPUs, and growth is going to stop for NVIDIA or slow down, then the stock's really going to get punished. So we'll see if I'm right or we'll see if I'm wrong. And I was right about Super Microcomputer. I made a really good return on that.
Oh, that was a good one. Yeah.
I closed it at a profit. I closed CrowdStrike at a profit. I started shorting Apple, which a lot of people think I'm crazy to do. But right now I'm just down 2% on Apple, and I keep shorting shares like each week, kind of do dollar cost averaging for my short position.
Mm-hmm.
But as this market keeps going up, these shorts actually make me feel comfortable because I'm like,
Right.
well, if the market keeps going up, I win because the rest of my portfolio is just killing it, right? Okay, great. Now, if the market kind of goes over the walls and starts dropping, I'll be like, all right, cool. Part of my portfolio, including bonds and my shorts, are going to start performing, and my portfolio won't go down as much as, let's say, if I didn't have those shorts in there. So we'll see how it plays out.
Yeah, just hedging yourself. Nothing wrong with that.
Cool, man.
Okay.
Well, it's great to see you. I'll be in touch. Everybody, thanks for tuning in. Everybody, enjoy your weekend.
Thanks, everyone. Okay, talk to you later.
All right. See you, Scott.
Bye-bye.